cybersecurity spending continues to expand as another source of demand becomes regulators forcing enterprises to undergo stricter cybersecurity measures. So, on top of the fear of enterprises of losing their proprietary data, losing valuable customer data, getting hacked, and financials getting removed, now regulators are putting on an extra layer of demand for cybersecurity spending. So, understandably, investors are interested in some of the players in this industry. And more specifically, in this video, I'm going to look at SentinelOne and Okta to determine which one of these two is the better cybersecurity stock to buy today. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So I'm going to compare these two on revenue, operating margin, cash flow from operations, and then I'm going to look at their valuation, both in terms of the discounted cash flow models that I've created for SentinelOne and Okta, and I'm going to look at multiples valuation, price to earnings, price to free cash flow, to look at and compare to see which one is better. On revenue, they've both demonstrated solid growth, with Okta demonstrating $2.5 billion in trailing 12-month revenue. That's up from around $1.5 billion in 2022. And SentinelOne at $770 million. That's up from around $200 million a couple of years ago. So they're both demonstrating solid growth. We don't have too many years of data for SentinelOne and Okta because they're relatively newer publicly traded companies. Now, when looking at their operating profit margin, two notable things come out to me. Number one is that they're negative. They're losing money on the bottom line. SentinelOne, negative 42%, Okta, negative 5%. The second thing that jumps out at me is the improvement, the trend line improvement. SentinelOne previously had a negative 120% operating margin, and that's improved to 42% negative. Okta, meanwhile, had a negative 60% operating margin in 2022. Now it's up to negative 5.41%. I often say I don't mind investing in companies that are losing money on the bottom line, as long as they demonstrate to me that they're making improvements and making progress towards profitability. And also, as long as they demonstrate to me that there is a path to profitability. And for both SentinelOne and Okta, I see both. I see improvement in their profit metrics, and I see a path to profitability, so long as they continue growing and expand to larger economies and scale. And even if they stop growing, they can control costs and improve unit economics to reach profitability. So I'm confident that each of these two companies can reach profitability longer term. Now, when you look at their cash flow from operations number, they're already positive and improving. So SentinelOne has operating cash flow of 4%, but that's better than the negative 80% it had in 2021. Okta, meanwhile, at 25%, has improved from negative 30% in 2017. So for this metric, not only are they improving, but they are also positive. The trend line improvement is better for SentinelOne, while the actual number is better for Okta. So now that we looked at the financial performance, let's look at valuation. For SentinelOne, I calculated an intrinsic value per share of $62. Compared to the current market price of $24, that signals that this stock is undervalued. Now, SentinelOne has a very low beta of 0.65, much lower than several of the other cybersecurity stocks I've evaluated. And that's a curious thing. So I've also evaluated this company with a higher beta. And if I were to increase the beta to 1, the intrinsic value per share would be $37, still undervalued. And if I raise the beta to 1.25, the intrinsic value would be $28.60, still undervalued. So I do think that it's prudent to adjust the beta higher for SentinelOne. The magnitude of adjustment higher, you can argue it should be 1, you can argue it should be 0.8, but I'll compare that with Okta. Okta has a beta of 1.01. So we can evaluate either SentinelOne using the 1 beta or evaluate Okta using the beta similar to SentinelOne, which I've also done here. So the intrinsic value per share I've calculated for Okta was $117 compared to the current market price of $96. And if I were to give Okta the same beta as SentinelOne of 0.65, the intrinsic value per share would be $205. I think it's more reasonable to evaluate both of them with the higher beta at 1.01. So that would mean that Okta is about 20% undervalued. And if you apply a 1 beta for SentinelOne, you get a $37 price target. And the current share price of $25 would indicate that it's about 40 to 50% undervalued using this valuation metric. But I also compared these two on the forward price to earnings ratio. According to this metric, SentinelOne trades at a forward PE of 65, while Okta trades at a forward PE of about half of that at 29. Each of these two is also trading at near the lower end of their forward PE ratios going back all the way to early 2024. So regardless if I use the forward PE ratio or if I use the discounted cash flow models, they both look undervalued to me. And I do have SentinelOne and Okta. I have their stock rated as a buy. I have them both rated as a buy. So this isn't an easy decision for me where one is a buy and the other one is not a buy. So it's a no-brainer to go with one choice. These two are close. They both have positive characteristics. Okta has the better numbers. SentinelOne has the better trends of improvement in the critical metrics. And then looking at the DCF, SentinelOne is more undervalued according to the DCF. Looking at the forward PE, Okta is more undervalued. It's trading at less than half the valuation of SentinelOne. So you can understand this is a close call. And if it was me and I'm deciding with $100 which one of these two to buy, I would just make my decision easy and do $50 and $50. But if you forced me to pick one and say you have to put all your $100 into one of these two cybersecurity stocks, I would pick Okta. It would be a close call, but I would pick Okta as the better cybersecurity stock to buy. A reminder, I like both of them, but if I had to pick one, I would pick Okta. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.